Hello and welcome once again to the channel. In this video, we will learn about the Heikin Ashi plus EMA based intraday trading strategy for stocks, forex and cryptocurrency. This strategy can also work when scalping and swing trading, so stick around till the end of the video. Heikin Ashi, also sometimes called Heikin Ashi, which means an average bar in Japanese, and it was developed by Munehisa Homma in the 1700s. They share some characteristics with the normal candlesticks, but differ on how they are created with opening price, highest price, lowest price, and the closing price. So, how do you calculate the Heikin Ashi? To calculate the Heikin Ashi, you need the Heikin Ashi close price, the Heikin Ashi opening price, the Heikin Ashi high price, and lastly the Heikin Ashi low price. So let's find out how to use the Heikin Ashi chart. The Heikin Ashi chart is constructed by the closing price, the opening price, the highest price, and the lowest price of the candles. The time series is different depending on the trader's preference, such as monthly, daily, hourly, or 5 minutes time frame. Bullish candles are represented by white, blue, or green filled candles, and bearish candles are represented by red or black filled candles depending with your broker. Normal candlesticks alternate colors even if the market is in a strong uptrend or downtrend. Green or blue candles with lower shadows indicates strong uptrend market, so you are comfortable to let your trades run. Green candles signify an uptrend, so add to your long positions but exit your short positions trades. When you find the small body candles having lower or upper shadows, this indicates possibility of price change, so wait for a confirmation before going long or short in your trades. Red candles indicate a downtrend, so you just need to add to your short position and exit your long position trades. Red candles with no upper shadows signifies a strong downtrend, so hold on your short position till price changes. A long green or red candle indicates a strong momentum in the market. Now we go to our Heikin Ashi plus EMA based intraday trading strategy. In this strategy, we will use the 10 and 25 exponential moving averages in combination with our Heikin Ashi indicator. I recommend a 30-minute time frame and above to reduce a lot of false signals in the market. To take a long position, we will wait when the 10 EMA cross over 25 EMA, then we enter on the second candle after the first bullish candle break and put our stop loss below the previous candle after the breakout candle. To take a short position, when the 10 EMA crosses the 25 EMA from above, we will enter on the second candle after a break, putting our stop loss just above the previous candle before the breakout candle. On the money management, we aim at a 1 to 3 risk to reward ratio. To illustrate in this Euro USD 4-hour time frame chart, we have our EMAs. The yellow one is the 25 EMA and the white one is the 10 EMA. We get a buy signal when the 10 EMA crosses the 25 EMA from below, so we take a long position, putting our stop loss just below the previous candle after the breakout candle, as you can see. To take a short position, we will wait for the 10 EMA to cross the 25 EMA from above, and we put our stop loss on the previous candle before the breakout candle, and we aim for a 1 to 3 risk to reward ratio. So many traders will wonder if Heikin Ashi is also good for day trading. Heikin Ashi are a good alternative to the normal candlestick, and they play a key role in identifying the trends in the market, making them more preferable for day traders, swing traders, and even scalpers. So, how profitable is Heikin Ashi? The profitability of Heikin Ashi depends on the trader's strategy. A trend following strategy will result into a high winning percentage rate, unlike sideways or ranging market trading strategy. When we compare Heikin Ashi to the traditional candlesticks, Heikin Ashi has a smoother and better look than the traditional candlestick charts, despite its other shortcomings. It makes it easier to identify market trends and movements. Just like any other indicators, Heikin Ashi has its own limitations. Heikin Ashi involves prices from 2 periods, hence taking long for a trade setup to develop, making it more reliable for swing traders who have time to let their trades play out. This forces one to add another indicator, like a moving average, to get more signals when entering into trades. Secondly, daily closing price is considered important by many traders, but you don't find it in Heikin Ashi. Instead, you get an average price. Lastly, Heikin Ashi don't have market gaps, which can be used by traders to analyze price momentum and even set stop losses to enter into a trade. Using one indicator alone does not give a high winning ratio, unlike when you combine it with other indicators. Watch my next video on the stochastic indicator as my day trading strategy. Till next time, see you.